Hey everybody, this is Henry Steele. Today is January 24th, 2024. It's about 11:45 a.m. right now, and this is a live E-mini S&P 500 chart right here. It's the March contract, and this is a 1-minute chart. And in this video, I just wanted to look at a live chart and identify support and resistance levels and zones, things like that. Kind of practice what I talked about in the previous video. So the first thing we need to do is, well, actually, let's back up a little bit. I'm not going to be looking at multiple time frames. In fact, I'm going to be talking about that in the next video I do, looking at support and resistance on multiple time frames. So in this video, all I'm going to do is look at the 1-minute chart here and point out some major support and resistance and minor support and resistance levels and zones and why they are what they are, so that we can get a little bit of practice identifying this. Support and resistance is one of those things that's pretty easy to understand, but it's often overlooked, and people they tend not to practice it at all, because it's one of those things where it's like, oh yeah, I get that. Why should I have to practice that? But it's something that's extremely important and very foundational to trading. So if you want to be a good trader, what's the stuff you should practice the most? The answer is the boring foundational stuff that's the most important. The underlying stuff, right? Everybody wants to forecast and make magic. The market made a top at exactly the time I said it was going to. Aren't I wonderful? That's nowhere near as important as understanding the fundamentals. All right, so if I have to cough or clear my throat or anything like that, I'm going to mute the microphone since I'm just doing this recording on a live chart, and I'm not really going to edit it at all, just upload it. And since support and resistance is a pretty simple concept to understand, this video isn't really going to be very long. And in this video, we're not going to look at support and resistance from multiple time frames. And we're not going to look at what you should be thinking when the market gets to support and resistance. All this video is about is identifying support and resistance, and whether it's major support or minor support, because that's important. Okay, so we're looking at this chart here, and this top right here is the biggest top. You see that we're up there right now. And then this bottom is the biggest bottom on the chart. So on the chart that we're looking at right here, this is the biggest move down right there, which makes this bottom, let me put a line here, and let me make this thicker. This is our major support. And the reason for that is because the move down to this price level here, where the market stopped and moved up, that's the biggest move down we have. And the move before the bottom or the top is pretty much what's telling you whether or not it's major or minor support or resistance. It's not how many times the price level or price area is touched, it's how big the move was before it. Okay, specifically on a static time frame. And since we're not changing time frames and just looking at the 1-minute chart, this is our major support right here. And this is unquestionably our major resistance, because this is the biggest move on this chart right here. So this top right here creates our major resistance. All right. Now, if we look at this, these moves down here and these moves up here are very small relative to our major move right here and this move right here. So none of these qualify as major support or resistance. They're all minor support or resistance. So we can let's put a bottom right here. I'm going to obviously make it red to identify the fact that it came from a bottom, but we're going to make it a lot thinner so that we can see it's a minor support. And if we look here, we see that in this same price area, the market made bottom here, it moved up, made bottom a little bit lower, then it kind of meandered a little bit lower right there. So the reality is we have an area, a level, a price zone of support right here. So if we look here, we see the bottoming action here, here, and then eventually here. So at the very least, this is our price area or our price zone of support. And we could actually, when the market comes over here and kind of bottoms right there, we can move this up a little bit. And you'll look over here, it's only 2.5 points. It looks like a fairly large amount on this chart because it's only a 1-minute chart. It's not a whole lot of point movement going on. Plus the market's not particularly active today, at least not right now. So we've identified major resistance, major support. We know why it's major because the moves that came before it are the biggest on this chart right here. We've identified a support zone from these lows right here, and we can do the exact same thing from these highs here. See the highest high right there. Turn that green so we know it came from a high, and then the lowest one is right around there. So we now have a zone of resistance right here, but again, this is a minor zone. And we see a behavior happening here. The market moves down, it comes up, it gets stalled out for a while in this zone. It really wants to go higher, but then it comes down here, and you'll notice that it broke out a little bit above this zone. And then when it came back down, it couldn't quite get to this zone right here. See that? But that's beyond the scope of this particular video. So now we've gone up, broken through this zone of resistance, gone up and touched, and we're currently at the major resistance zone right here. But do you see how the market's just sitting on top of this zone now? That's typically what happens. We get a support or resistance zone, in this case resistance. Once the market breaks through, it then treats it as the other. Used to be resistance, now it's support. So let's go ahead. I'm going to remove these drawings, and we're going to go back in time just a little bit because I want to show you something here. Let's see. This will be good enough. This is around 7 a.m. This is all Central Standard Time. My time zone in Texas here. So we have this high here, and at this point in time, you know, the market, it's not moving much at all because these are the off hours of the market. But then we have this big move, which makes this top the major resistance zone or major resistance price. And then the market moves down a little bit, and then it's this top, and then it moves down pretty significantly. So this right here becomes our major resistance. And as we can see, there's multiple tops happening here, all within a little bit of price. So we really have a zone right here. And I'm going to make this thicker to identify the fact that it's major. And we see the market move down. It came back up to it, and it couldn't get through it. That's our zone. It came back and touched our resistance, and then it went down. Then what happened? When the market came back, it was able to punch through it, but look what's happened. Our minor support right here is right around this area right here. So typically what happens when you're in a less volatile part of the day and you make a major support, or in this case, a major resistance level, later in the day when the volatility picks up, those previously major levels will tend to be around your minor levels for the more volatile activity. Hopefully that makes sense. And we can see that happening here. In other words, this was our major top previously. Then the market opened up, volatility increased significantly, it broke through it, and it's been using approximately this price area right here as support. And then it's continued up off of that right there. And if we go further in time, back in time, I mean, to like this is 2:30, 3:30, 4:30, 5:30 in the morning, we can see that we had a high here. The exact same thing happened. The market moved up. This, I mean, there's barely any volatility here, but this is our major resistance at this point in time. It moves down, it catches it, can't get through it, it finally breaks through it, and then it's the support, right? So anyway, that's one of those major things to learn about trading is support and resistance. It's one of the things that it's the easiest for people to understand and the fewest people in trading who are not successful. Well, let me say this a different way. People who are successful at trading pay a lot of attention to support and resistance. People who are less successful at trading and want to get into really complicated forecasting methods tend to pay a lot less time than they should on support and resistance. Because in all honesty, if you're good at support and resistance, that's all you need to be able to trade and make decent trades. If you plug support and resistance understanding into a really good money management system, you can be good at trading just with that. So the things to learn here, the major support and resistance levels comes from the biggest moves up until that point in time on a static chart. In future video, in the next video I make actually, I'm going to talk about using support and resistance levels from other time frames, but that's beyond the scope of this video, obviously. And of course, we can make angular support and resistance, which is also known as trend lines. And we can do, for instance, this is a big low here. We have, let me make this thicker. There we go. We have the market come up here, find support, it breaks below it right there. Let me zoom in a little bit. And then it's using it as resistance. It kind of looks like it's snaking around this line right here. And that's a common thing on a small time frame because smaller time frames have typically less distinct tops and bottoms. You get a lot more of this sideways type action right there. Not that that doesn't happen on other time frames. Obviously it does. But you get there's a lot more information on a small 1 minute chart right here. But you can still draw these trend lines here and they're still going to be decently useful. But a lot of times when you're this zoomed into the 1 minute chart, you're going to find stuff happen like this, where you snake up or down a trend line and it just kind of follows it. It's above it a little bit, it's below it a little bit, and then it'll break and then find support or resistance off of it and then move away from it. And then it never touches that trend line again. Sorry about that, I had to clear my throat there. So when it comes to using trend lines for angular support and resistance on a 1 minute chart, you're going to get a mixed bag of results. In other words, you're going to get a lot of this stuff right here. If we go to let's look at a 15-minute chart really quickly. You'll find like we have a bottom here. We have, that's the angle one. I don't know why I went to that tool. Probably because I use it upon occasion. So I have this trend line right here, which was, it's a support trend line. It's this angular support line right there. Comes up, the market finds support right there, but then it breaks right through it. So let me delete this. Something to keep in mind here. There's two different main types of markets. A strongly trending market, up or down, in this case it's up, and then a sideways market. Angular trend lines, or angular support and resistance lines, catch more moves in a sideways market. They produce better support and resistance levels or areas when your market is trending sideways like this, much more so than when it's trending like this. That's just something you'll want to keep in mind. Another thing to keep in mind is the fact that you'll tend to develop a tendency to either really like angles and use them as angular support and resistance, or really not like them. In other words, you're going to have a preference that you'll see start to develop if you practice finding support and resistance horizontally, and then you start practicing finding support and resistance with angles. You're going to have a preference for one of those. My personal preference is to use horizontal support and resistance levels and zones, and to keep the angles and use that for timing methodologies. I'm not really a big fan of angular support and resistance, although it can be, I know people that use it very well just as price level support and resistance. So anyway, I'm going to go ahead and end the video here. Like I said, this is not a hard concept to understand. The major thing to get from this video is that you should be practicing your support and resistance identification. You should be practicing identifying, is this major support and resistance or minor support and resistance? And you should be watching for previous major support or resistance to turn into the opposite, meaning this used to be resistance right here, major. Over here, it's minor support. Does that make sense? So with that said, I'm going to go ahead and end the video here. Hopefully you found it useful and informative at some level. The next video I'm going to be talking about support and resistance from multiple time frames. And that one's going to be an explanation video. And then I'll do a live video where we work on identifying that stuff a little bit. So until next time, this is Henry Steele, and I'll talk to you in the next video.